Welcome to our 2020 edition of CS Talks. I'm Christina Medina. I am the Director of Sales here at One Manhattan Square. One Manhattan Square is an 80-story luxury glass tower designed by Adamson Associates and developed by one of New York's premier developers, Extell Development. Due to its strategic positioning on the Lower East Side waterfront, our residents truly enjoy unprecedented views of the New York Harbor, the East River, One World Trade, and spans all the way uptown with an incredible view of the Empire State Building. We offer 1, 2, and 3-bedroom homes with 100,000 square feet of indoor and outdoor amenities, including a 1-acre private garden designed by West 8, complete with fire pits, barbecue grills, an adult treehouse, and tea pavilion. In addition to being one of the last remaining buildings to receive a 20-year 421A tax abatement, One Manhattan Square also offers exceptionally low common charges, averaging $1.28 per square foot. Today we're being joined by Carrie Galloway. Carrie is a managing director at a Lower Manhattan wealth advisory firm and best-selling author of Your Money, Your Life, which is an insightful look on reorienting your decisions to focus on your long-term goals. Can you tell us what inspired you to write the book?
I wrote the book because I really want to make sure that women are able to live their best life in the future. And what I really mean by that is that most of the time, many women do not focus on themselves and they put everybody else first, and they really take a back seat with thinking about their own. It goes from things from health to wealth. And this book is an easy step for somebody to take and start the process. And many, many times I hear when I speak to women that one of their biggest fears is that they don't want to become a bag lady. And ultimately, though, they're not actually doing any action to make sure that that doesn't happen. And the book is an easy way for people to really change the trajectory or the path that they're taking and really start to have more control over what their own destiny is. Ultimately, I hope that as many people as possible will read the book, but also ultimately be inspired by even just one little thing to make a change in the future.
And what's so inspiring about the book to me is that you wrote it in a way that's easily digestible.
I'm glad to hear that.
Yeah. From my own personal standpoint and what I've seen as well, I feel like women are just starting to really take control over their financial future and becoming like an equal partner in their relationships or on their own, just preparing and planning for their future. So you're looking at personal investments, real estate, various assets. What portion of that do you advise your clients to focus on with real estate?
Sure. So it's a great question. It's also one that a lot of times I think people are looking for that, a percentage or a specific number that they can then plug into a formula. And I don't think that that's always realistic because there are definitely situations where there could be a big range. So the industry has put out a number. So the financial industry, I know at times will say that real estate should not be above 50% of somebody's net worth or their asset base. But I don't think that people have to necessarily hold that steady, and there can be different reasons for that. One could be if it's a younger couple who's just starting out, it might be totally appropriate to have a significant amount of somebody's wealth be in real estate because that could be their home. The flip side, I think another good example of where real estate could end up being a higher amount for somebody's overall net worth or asset portfolio would be, I think about somebody who's close to retirement. And I know I've had a lot of clients who they've lived outside of New York and then but they know that once they retire, they're gonna downsize their house in the suburbs. They wanna own an apartment in the city, and then maybe they own a small condo somewhere else, like in Florida. So with that, all of a sudden, they might have a lot of real estate at one point, but they know that they're gonna eventually, sell a property that's outside of the city, and then they'll be left with the property in the city. So I hope that is helpful in terms of answering the question.
Absolutely. And then like in terms of investments and things like that.
How much should somebody have in other like liquid investments? Again, that's something that is going to change as somebody sort of goes through life. So again, I think younger people, it's going to be less. As you get older, again, it's going to be partly really dependent on what somebody wants, what their needs are, what their cash flow is, where they're getting income from. So again, it really can be really a big variable.
Carrie, how do you help your clients determine how much money to allocate towards a real estate purchase? Like, are there any specific factors you guys discuss and consider in the process?
Sure, that's a great question. There's lots of variables. I think, though, the major ones that we talk through with clients is the first major one is really income. What are the income sources that somebody has to use, which ultimately then comes down to their cash flow. Mm-hmm. So what is that on a monthly basis or an annual basis that then can support the purchase? Another big factor is getting mortgage and mortgage interest rates, and where are they? So currently, with rates really, really low, historically low, it's a great time for clients to be, if they have been thinking about buying, that's a great factor now with rates really low that can help somebody either buy a little bit more of a house or spend a little bit more, or either it just means also that maybe they just have more left over in their pocket that they could use for something else. The other big factors, of course, are going to be what are the other costs associated with buying. So it's not just about the purchase price, but of course, taxes, if there's any other carrying costs like homeowner association fees or maintenance on an apartment. So really looking at all of those aspects.
No, that's really good advice. I myself was a first-time home buyer.
Okay.
So there were a lot of factors that I wasn't even aware of that I had to take into consideration. So I'm so glad that you bring that up. I'm also really glad that you bring up looking at, the taxes and the common charges, because here at One Manhattan Square, we're in a really unique position. We have a 20-year 421A tax abatement, so we have a lot of savings there. We also have relatively affordable price points and extremely low common charges, like very competitive common charges. So with that in mind, can you tell us how the low acquisition cost and operating costs would affect your buyers in today's value-driven market?
Sure. So I think that it ultimately means that somebody can either buy a little bit bigger of an apartment or at an apartment, and I'm assuming that might mean that that apartment costs a little bit more. Their budget then changes, and they also, the other side of it might be if they don't end up buying a bigger apartment, they then have other money that's left over to use to do other things. So I think, that's the other piece that's, I think, really fantastic, is that some people can look at being able to buy their great apartment and then still have other money to make sure that they can have their emergency fund, or they're still able to take vacations and do different things, whatever they want.
Right, they have more money left over at the end of the month where they can invest it or buy potentially an investment property, thereby making those decisions now to build wealth in the future.
Exactly.
Yes. Now I'd like to walk you through one of our most sought after residences here at One Manhattan Square. Residence 61E is a 3-bedroom, 2-bath, 1,400 square foot home priced at $3.537 million. Common charges are just $18.88 a month, and real estate taxes are just $30 a month. I love the uptown city views of 61E, and you see the East River. It's a perfect combination. The kitchen is equipped with integrated storage, custom cabinetry, Miele premium appliances, a Sub-Zero wine cooler, and the best part, a built-in Miele whole bean coffee maker. 2 finished packages designed by Meyer Davis offer residents the signature Extell choice, a light and dark scheme. One Manhattan Square truly has it all. Our buyers have been able to take advantage of the fact that our combined monthly charges are $1.28 per square foot with our 20-year 421A tax abatement, whereas the new development average is around $2.93.
The difference of $1.65 per foot is money a buyer can save,
or used to buy a larger home.
And that has the potential to dramatically increase a buyer's purchasing power. When you think about that in real dollars for a 1,000 square foot residence at One Manhattan Square, that translates to a savings today of $1,650 per month compared to another new development. That monthly savings combined with today's low interest rates could really elevate your home purchase price point beyond what you originally thought you could afford. Carrie?
Thanks for having me.